Hi everyone, I'm Akshay Bhargava. I'm the founder and chairman of Bridgeweave. We are an AI fintech company that's based in London.
I remember as a child, my parents had this weekly ritual known as a bank visit. They would go meet the cashier and they would probably know each other by name. And they would do the kind of stuff that grown ups used to do in banks in those times, which I hardly understood. For me, it was just a boring visit in a dark, dingy bank. It was not a great experience, honestly. Today, this is unimaginable. You can do anything you want to do with respect to your banking transactions on a mobile app. Today, you can do any sort of banking transactions on your mobile apps in seconds or minutes. This has happened across sectors and services in the banking domain. We've spoken to a couple of founders who are building wealth management products that help you manage your wealth through a few clicks. But in the space of HNI wealth management, this kind of disruption has not really happened yet. HNI wealth management continues to be a very high touch business with very well paid wealth managers working with the ultra rich, helping them optimize their portfolio investments. Akshay Bhargava was running wealth management for one of the top banks in the UK, where he realized the opportunity to bring about a tech disruption in this space. His startup, Bridgeweave, has two flagship products. The first is a SaaS product that makes wealth managers more productive, helps them manage more clients within the same number of hours. And the second product, which I really was fascinated by, is an algorithmic crypto investment platform. So you can leave your crypto investment to the algorithm, and it takes into account thousands of signals to continuously buy and sell, and in a very, very short duration. I think this really has immense potential to transform the way most people do their crypto investments. In this conversation, Akshay talks about his take on wealth management, his take on crypto as an asset class, and some of the trends that he sees in this space. You're listening to the Spotlight podcast, and I'm your host, Akshay Dutt.
There were three triggers. One was I felt very strongly that wealth management did not use technology very effectively. And that is a view I continue to hold. I still don't think they use technology very effectively. Okay. But very interested in AI as a technology, and that something was possible, that we could build something that would really make a difference. And that was the second. So first was the inadequate use of technology, which created a need. Secondly, I felt AI was a solution, so I thought I had the solution. And thirdly, I was approaching 60 at the time, and I said, if I don't do something now, then I will never do it. So I went to Barclays, and they were very decent about it, and they let me make the move. And that is how the idea of Bridgewave was born.
Why do you say wealth management doesn't use technology? You have all these wealth management businesses in the US which are using technology and AI to manage portfolios.
Yes, but I don't mean, when I say wealth management, that is not what I mean. When I say wealth management, really high net worth, extremely high net worth, where there is very little technology, you have very expensive and very good front office staff who get paid a lot of money, but they are very sophisticated individuals. You can't go with the robo advisors when you're talking to Mr. Adani. You know what I mean. You need very different products, you need very different structures, you need very different skill sets, you need a different level of maturity. It's a face-to-face selling. It's very institutional in nature. Sometimes you're not even dealing with the customer, you're dealing with the family office because they're managing large bodies of money. So that is the business I'm talking about. And I felt their technology wasn't being used much because the front office relies on individuals to deliver the product.
And what is so essentially that business? It's a feature of that business that it doesn't use technology, right? Like, I mean, that's what the business says: personalized attention and all of that. So what is the role? Like, how could technology make it better?
So I'll give an example here. There is no real difference between corporate banking and private banking. Okay, because both are very institutional in nature. But when I'm dealing with you as an extremely rich individual, you are dealing with me, and your relationship is with me, Akshay Bhargava. Yes. And what tends to happen is if the individual were to leave the bank, the relationship is at risk. Whereas in a corporate context, you're always dealing with the bank. And also, in a corporate context, it is the bank who's lending money most of the time to the corporation. Whereas in the retail, in a private bank, the individual is placing money with the bank. So the power relationship is inverted. The customer is king. Customer is not borrowing from the bank. Bank is borrowing from the customer. It's an inverse relationship. Now, the real challenge is, so when you have very expensive staff, and this was a problem I dealt with in Barclays, when you have very expensive staff, what do? The only way around that problem is not to pay them less because that's the market. The way is to make them do more. Okay, so if I, as a private banker, handle 50 relationships today, because that is my capacity, if somehow that capacity could be increased to 200 relationships, it is a win for everybody. It is a win for the bank because they are doing more with one very expensive resource. It is a win for me because my revenue contribution goes up, therefore my bonus goes up. Okay, now the only way to do that, I think, is technology. So we found, for example, that when the customer came in and he said, I want to talk about my portfolio. Now, what we had to do was to download the customer's portfolio, look at all the analysis, look at all the holdings, equities, funds, bonds, etc., do an analysis, prepare a nice material report, and then be to the customer. It took 3 days. Okay, now if it was AI that could do this in half an hour, you could have 5, 7, 10 times as many customer portfolio conversations in a day.
What happens in this portfolio conversation? Like, you ask the customer to share data about his current.
I am managing the customer's portfolio. I know all the data. But I have to explain to the customer that your stock portfolio has outperformed the market by 3%, your bond portfolio is underperformed by 1%. But don't worry, the underperformance is due to 2 bonds you were holding. The rest of the bonds have done very well. If we were to sell these 2 bonds and replace them with these 2 others, it doesn't change your portfolio or doesn't change your risk or your Sharpe ratio, but your performance will go up. So it's that kind of analysis. It's like a doctor here. You have diabetes, you're taking metformin, you're taking this and that, your sugar will get better and stuff like that. So it's very much a forensic analysis of how your investments have done and what is the way forward. And how do you keep your portfolio healthy? The doctor would say, how do I keep you healthy?
Okay, got it. Okay, I understand how technology can make a wealth manager more effective. So what is it that you started off with? Like, what did you build as your version 1 of product at Bridgewave?
Yes. So this is where the story gets really interesting and the drama begins to start. So we first said we will build AI algorithms that can take in all the portfolio data and take in all the market data, because then you have to analyze the portfolio against market performance. So take a massive amount of data and then create insights out of it and how to make it better. Okay. So that took us about a year. So now we are into 2019, middle of 2019, or towards the second half of 2019.
Were you working with some beta customers for building this product while you were building?
We worked with Barclays, we worked with Citi. We had a few beta customers, but nothing very major. And then by end of 2019, our product was ready and we started to take it out in the market. We had good response. But then in March of 2020, lockdown happened. So our entire pipeline vanished. And we would call people and they say, there's nobody in office. We are all scared. So we had the product, we had the engineering, we had the...
Selling it as a subscription, like you pay per seat? Or
yeah, we were selling it as there were 2 ways we were selling it. One is we could sell you as a subscription. You pay me per portfolio per month. Or we could sell you as a service. So we do a dedicated customized service. And we found that different banks had a different model. One of my worries was that it was never the same structure to 2 banks. Everybody wanted something different. Oh, give us equities, but don't give us bonds, but don't give us ETFs. Give us bonds and equities, but don't give us funds. And these funds, by the way, we have only 150 funds. Don't look at other funds. Look at only these. So there was an incredible amount of customization that was required. Anyway, we were dealing with this, and then the lockdown happened. And so then, luckily, we cut expenses. We took deep salary cuts, and me included, and the business survived.
And this is all
And
bootstrap. Like you had not taken any external funds till this time.
we had taken some external money, but angel money, no VC money. So we had some seed investors who would come in, but there was no VC money. There is still no VC money in our company. And sometimes I wonder whether it's a good thing or a bad thing, but that is what it is. So during lockdown, Akshay, we saw a very interesting phenomenon. We saw tens of millions of customers, individuals, go directly to stock markets. And you've seen this in India. Zerodha, 5 Paisa, they have all boomed during lockdown. 18 million customers, 1.8 crore new customers entered the market. Okay, and the trend continues, by the way. Once it started, didn't stop. Same thing happened.
Even globally, that whole meme.
Even globally, that Robinhood. We all know the story of Robinhood. In UK also, there are a number of companies that saw the same phenomenon. And initially, we thought this was a lockdown thing. People are bored, sitting at home, still getting paid, and therefore the stock market was doing well, and they're putting money there. And then it didn't stop. It just refused to stop. And then we realized that there is something very different happening. We felt that what is happening is a new generation of investors is voting with their feet. They are basically saying we don't like wealth management models. We don't want wealth advisors. We don't trust banks. We don't trust institutions. We trust each other. We want to do it ourselves. We don't want to pay big fees. And we would rather do our own research and go and buy in the market. And then, of course, there are people like Zerodha and Paytm Money and all that made it super simple to buy. Okay, there's zero fees also. So fees came down, the action became very easy, and of course, people went and bought. And we began to realize that there was still a problem. And the residual problem was that, yeah, it is very easy to buy, but what should you buy? No one knows that. So we said, wait, we have the algorithms already. We can repoint them to the retail market. And that is what we did. That is how our product Investor AI was born. Okay, so we converted all our algos into a little app called Investor AI, and we made it available to retail individuals in the market. So that was the first action we took.
One question about Investor AI. Which country was it made available for? Because you would need to develop it separately for each country, right?
No, we didn't. We developed one app covering US markets, European markets, UK markets, and Indian markets.
Wow. Okay.
It's the same app. So what is available in India is the exact same version that you get in US. No difference.
Okay. But the data being fed.
It's the same process. Data comes from one place. Algorithms are in the same place. They just turn on the signals and we do it. So that was done. So it is one single app globally. That is quite a powerful idea. Then we started to realize that, and we launched it in India because UK and US were in lockdown at the time. So we said India is open. India was open. Then, of course, India went into second lockdown. So we were being very opportunistic. Where is the door open? We can drive through. So, these are very interesting days. Anyway, so we launched it in India. And then we realized that, at least in India, and maybe globally also, people don't want to pay for information. Okay, that was a very big learning for us. So we said, how do we make money from this? It's a very good product, but paisa kaise banega? So then we said we will partner with institutions. Okay, like brokerage houses, free to use. But we could then package our signals through APIs for brokerage houses who could monetize it because as a part of their transactional service. And that monetization we could share. So, for example, we have a product with Paytm Money, who's a great partner for us. We have also launched a recent product with Yes Securities, which is another wonderful product. And so Paytm Money, for instance, we give 10 large cap ideas in a month. And that costs 150 rupees a month. Okay, and we share that revenue. With Yes Securities, we have launched a different product, which is an automated AI-driven portfolio. So it's a portfolio of 10, 15 stocks that balances automatically once every 15 days. And then you can subscribe to it. And again, they market it to their customers, and then we share revenues in some manner. So that is our model. So we have a number of B2B partnerships, which B2B2C partnerships, which we are very happy with.
So this is a premium offering for all of these apps. ATM has a paid offering which will give
Correct.
you AI or robo advisory basically. So essentially, robo advisory is available on tap for any fintech if they want
See,
to
this is
offer.
not robo advisory, Akshay. I just want to be a little pedantic here. Robo advisory, the way it works around the world, is you come to me, I do a risk profile for you, and I say, I've done your risk profiling, you are low to medium risk. And then I put you in the low to medium risk bucket, and everybody in that bucket gets the same solution. So they create 5 solutions. It is generally mutual funds, some mix of mutual funds, and low medium has one set, medium has one set, medium high has one set, high has one, and so on. I actually think that is a very simplistic idea, not in a good. So I think robo advisors have very limited use. It works when you have very little money. If you have 10,000 rupees to invest, then maybe that is the best answer. But if you have lakhs to invest, then you can do more. You can do better.
So how is this different? How is this different? So you said robo advisory is putting people into a pool, and then that pool gets the same recommendation.
Yeah, so we don't put anybody into a pool. What we are saying, AI has generated this portfolio of 15 stocks. You can buy all 15 in the ratio that we have said, or you can say, no, I like energy sector more, so I will overweight Reliance. Or I will say, I don't like Reliance as a company. I will not buy Reliance at all. I'll buy the other 11 stocks. You have full freedom to do what you want. Once a fortnight, we rebalance, and then you can accept the rebalance as is, or you can make your own changes and rebalance.
But the ideal portfolio that you recommend, that is a universal recommendation, or each person gets a different recommendation?
So there is no ideal portfolio, because ideal only exists in a context. So I can tell you that this is an ideal portfolio for you. I can tell Shruti this is an ideal portfolio for her, but the two portfolios could be different. So there is no one ideal portfolio. What we do is create a portfolio of stocks where our AI engine believes will give you the best return.
Okay. And that you here is a critical factor, like each you will get a different recommendation.
No, this is not even a recommendation, Akshay. Because I can only make a recommendation if I know what your requirements are. I am not asking you for any requirements. All I'm saying is my AI is saying these are the best 15 stocks. Now, and I'm not saying you give me the money, I will invest in them. I'm saying these are 15 stocks. You want to copy this portfolio? Please copy. One click on small case.
So this is like for the next 2 weeks, these are the best 15 stocks based on what's happening globally. And
so think of this as a copy portfolio product. There are many places where you can copy your portfolio. You can say, tell me what Warren Buffett's portfolio is. I will copy that. Warren Buffett's portfolio may be $3 billion. You may say, I have only $10,000, but give me a mirror image of Warren Buffett for $10,000. Because I trust Warren Buffett. Whatever he's doing, I want to do. I'm not giving my money to Warren Buffett to manage. I'm saying, please, sir, show me what you're investing. I will invest the same. That is the principle we are following. So we are allowing people to copy a machine portfolio.
Got it. Okay. So for people in India, these 15 stocks are the best option for the next 2 weeks. That is what the algorithm turns out.
So these are the best options, and every 2 weeks we will review the allocation. And if it changes, we'll tell you what the changes are. And you are free to copy them or not copy them. Okay, so it's a very different. It's not a money management or a recommendation proposition the way traditional. That is why I don't charge too much money. I charge 2,000 rupees for it a month.
Per user.
So, yeah, because I'm not managing your money. I'm not taking your money. Sits in your account. आपको जो करना करते हो.
So, and that 1,000 rupees, so like Paytm, for example, would be charging 1,000 rupees to their users for this, and they would share some amount with you.
Correct. Okay. So this is the part 2 of the story, and part 3 of the story is about what I'm now about to tell you. And so we realized that we had a number of customers, and when we interviewed these customers, we began to realize that they were young. Firstly, we had a lot of people under 30 and a lot of people over 55, and very little between 30 and 55, because that is when you have home loan, car loan, children, school fees, mortgages, all that expensive holidays and things. And after your children go off into college and all, then you have little more money to spend. Or you're very young and you're trying it out. And we asked them, what do you invest in? And we found they were not investing in mutual funds. Some were doing SIP and all that, but by and large, they said we do equities and we do crypto. So we said, oh, crypto. We hadn't realized that. And we said, okay, if this is our customer, we are not serving the customer completely, because we are solving one part of the problem, but we are not doing anything else. So we said, okay, we should be. So we said, strategically, we must think about how to do it. So we called our team in labs, which are really our incredibly smart scientific brains who do things that I cannot do. They are extremely bright individuals. And I said to them that, can you create an algorithm for crypto? So they came back some weeks later. They said, yes, we can, but we cannot create an algorithm the way we have for equities. I said, what do you mean? He said, in equities, we have a 30-day recommendation. In crypto, 30 days is too long. We cannot make a recommendation that is valid that long. Or even 15 days, or even 1 day. So I said, okay, what can you do? They said, we can do 2 hours. So we can give you a 2-hour recommendation, a 3-hour recommendation. Max, we can go 6 hours. Beyond 6, the signal will decay and you cannot trust the signal. So we said, wow, this is really interesting. So we said, then we realized that if I come to you and say, Akshay, here is a 3-hour recommendation, what are you going to do? You can't buy, sell, because you're busy with other things. By the time you go to buy, the price has moved. So it's a useless recommendation. So we said, the only way this recommendation works is if we allow you to automatically buy and sell instantly. So we created a series of execution bots that we have now attached to the recommendation engine. So it not only tells you what you can invest in, it will immediately invest it for you if you say, please do. And literally all you have to decide is how much money you want to invest. 10,000 rupees, 1 lakh, 5 lakhs, whatever, and then it'll go. Okay? And that is our crypto product. We call it Investor AI Crypto. So it is part of the same product family, which uses AI to come up with the recommendations. And then in the case of Investor AI Crypto, it goes to the next step where it actually executes those recommendations. So Investor AI, the original one, is a information product. But in which Investor AI Crypto, which is the new product, is actually a transactional product. Okay, so that is what we have launched. Now, ironically, we launched that product about 6 weeks ago, and what has happened to the crypto market in the last 6 weeks? It has collapsed. Talk about bad timing. So we, of course, are optimists. We are saying, yes, it was bad timing in that sense, but it is very good timing, because anyone who comes in now is coming in at the bottom of the market, and therefore upside is far greater than downside. But let us see what happens. So that is the Bridgeweave story in a sense. Now, there is a part 4. There is a part 4 to this. Let me just finish that thought. And the part 4 is actually quite an exciting one. I don't think it is there in the next 12 months, maybe a little bit longer. But I think where the world is going with Web3, blockchain, decentralized finance, they all mean roughly the same thing, is very exciting. And what excites me is the ideological underpinnings of Web3, which is that there is no central authority that dictates what happens and sets the rules and conditions and the prices and so on. It is community owned, community governed, and community managed. Now, of course, there are some centralized things that have to happen. But imagine if there was a mutual fund that did not need a fund manager, because AI managed the money, came up with recommendation. Imagine if there was a mutual fund where, if you could buy and sell instantly and you got your money in the bank in the next 30 seconds. Imagine if it didn't charge you any fees or some very small fees. Okay, imagine if you could enter and exit at will. Imagine if you could say that I don't really think I want to invest in any assets that have any Russian holding. So you could exclude, include, you could make up your own ESG criteria, your own priority criteria. You could dial things up and down, and the technology were to do it automatically. And imagine if you could take your portfolio and say, I want 70% in stocks, 20% in funds, and 10% in crypto assets. And it all was part of one seamless portfolio, and you could switch back and forth without a problem. That would be wonderful. That is the future we want to build. And that is going to, I think it is going to take us 2 years, 3 years, but we are very focused on it. We are very excited about it. And all the products we are building, Investor AI Crypto, our AI portfolios, all will be components of the larger jigsaw.
What is AI portfolio?
AI portfolio is what I just described to you, that 15 stocks which rebalances every 15 days. We call them FTM, follow the machine portfolios.
Okay. So AI portfolio is what is embedded inside a Paytm or a Yes Bank.
Yes. So if you go to Yes Securities and you look for, in fact, they are doing something very interesting. They are taking the portfolio and saying this is an AI machine generated portfolio, and here is a human recommended portfolio, and they're saying you compare man versus machine and see who does well. And we are saying bring it on. We will take that challenge.
Okay. So I want to dig a little deeper into what kind of traction you saw in each of these phases. So when you launched the free-to-use retail app of Investor AI, what kind of traction did you get? And this was purely just advice, right? There was no transaction capability in the retail Investor AI.
Yeah, there was no transaction capability. We then subsequently added a transaction capability, but it wasn't a seamless transaction capability. It was the ability to log into your brokerage account without leaving our app.
Oh, okay. So you could log into your Zerodha or your
Zerodha, you have 14 accounts, brokerages. So that was quite useful. And we had very good reaction. But like we said, the revenue model was not very robust because we wanted to make it a free app. We wanted everybody to use it. And I think in that we were successful. But then when we started to distribute it through partners, then we started seeing different kind of.
What can you share?
On the app itself, I forget, we have close to 30,000 users, many of them in India. I don't have the numbers for what is happening with IFL, Paytm, and some of our partners, because then it's kind of embedded in their sort of app. I would expect, I don't know, my this is just a guess number. I would expect about somewhere between 2 and 5 lakh people see it every day, not or every so often, because all these people have millions of customers. You don't know how many people are looking at it.
No, but this is a paid service by these apps, right? Paytm is showing this recommendation to somebody.
Paid service, yeah, those numbers we don't disclose. So, yeah, I'm just talking about just viewership and things.
So, what is the difference? The Paytm will serve to everyone, but some people who are paying can maybe do the one-click balancing of portfolio.
Yeah, so, for instance, if there's a portfolio on Paytm, that portfolio is visible to everybody. You want to buy with one click, then you have to pay. You have to rebalance every fortnight, then you have to pay. That's how it is. And it's not very expensive here. We really wanted to make it very democratic, open access, everybody should use. So it's a few hundred, it's not massive amount of money.
And for the crypto product, this would not be embedded inside a Paytm or a Yes Bank because they don't offer crypto, right? Like you would.
No. Crypto is very different. Crypto is not going to be embedded inside anything because, look, these banks are governed by the RBI and they are not yet ready to get into crypto. They will be. My belief is that they will be. But I think once the regulatory position becomes clearer, I can see banks getting into crypto. Because don't forget, there are 300 million crypto investors in the world. India has 100 million out of it. 30% of world investors in crypto are in India. Now, 100 million is a big number. Now, how many stock market investors are there in India? 80 million, 85 million, some number like that. So there are more crypto investors than equity investors.
That's amazing.
You cannot ignore that. So whether you're a bank or whatever, at some point you have to pay attention. Now, I understand because of regulatory uncertainty, it is not a good time for banks to pay attention, but they will at some stage.
So, what will be the distribution channel for Investor AI Crypto? Are you directly distributing? Is it a direct to customer offering, or will it be embedded?
So we always have a direct to customer. So if you go to App Store, you download Investor AI Crypto, you can download it just now and put it on your
Okay.
phone.
Okay.
But we are also looking at partners.
This would be free to use the Investor AI app download. If I, as a retail user, download it.
Yeah, download is free, but remember, this is a transaction app. It is not information app. It is not giving you news about crypto or something like that. It basically tells you, here is a strategy. You want to invest in it. We will invest in it. And it will then invest for 3 hours, 2 hours, 5 hours as it thinks appropriate. And the machine decides. And the machine decides once the 3 hours is over, and you can say, please go again. And it will keep going again. And so it could keep going all year if you don't tell it to stop. Okay, so it's a very different app. Now, in 3 hours.
How are you doing the transaction? Is it the same that you can log into, say, your CoinDCX?
No, it is much more smooth. So, for instance, we are philosophically, we also say the portfolio that we are not taking any money from you. Okay, your money sits in your account. Now, your account is with some exchange. Okay, let us say it was with CoinSwitch.
To like a CoinDCX or CoinSwitch or
CoinDCX, CoinSwitch, WazirX, etc. So let us say it's CoinDCX. We say keep your account with CoinDCX. But please go to CoinDCX and give us an API key into our app and link our app with your account. Once you link, the trading is automatic. Okay, so it is very easy. And the app can continue to do it without bothering you.
Okay. So, because these crypto exchanges are private as opposed to, say, an NSE, which is not a private organization, therefore they give an API access, and therefore this you're able to build a friction-free experience for customers, which you could not do in equity, because in equity there is a regulated entity which would not allow that kind of API access.
No, I can still, equity also I can do it. For instance, Zerodha gives you API access. I can trade through Zerodha if I wanted to on equity. I just haven't done it. Theoretically, I could do it with Zerodha. I could do it with any other who gives me APIs. So it's not a regulatory thing. It is just see, in equities, what happens if I give you a recommendation? I'm not saying to you, Akshay, this is good only for 1 hour. I'm saying this is a good recommendation. You make money in 30 days. So most people like time to think and all that. They may buy now, they may buy 1 hour later, they may buy in the evening. They might say weekend pe dekhenge, abhi time nahi. But crypto, you can't do that here because the recommendation, there is no 30-day recommendation possible. The only thing possible is 2-3 hours. So then you have to do this. That's
fascinating. So, as an analogy here, the way you have self-driving cars, this is a self-drive for investments, where you can just turn on the autopilot, and the autopilot will every 2 hours do the transaction, like sell what they feel is not appropriate or buy what they feel needs to be bought, and this can continue as long as you keep the autopilot on.
And the beauty is, another lovely feature we have is that, so now there are many cycles in the day, trading cycles. So you could have a 2-hour trading cycle, you could have a 6-hour trading cycle, anything in between. So we are finding typically we have 5 trading cycles in a day, between 4 and 5. Okay, and some of these are winning cycles, some of these are losing cycles.
What do you mean winning cycle, losing cycle? What is that?
So in a winning cycle, at the end of the cycle, you made a little bit of money. You started with 100, you end with 100.5. In a losing cycle, you start with 100, you end with 99.8. Okay, it's very simple. If it is a winning cycle, only then we will charge you. And we will charge you only $1. Okay, so whether you are deploying $500 or deploying $10,000, we will still charge you $1 only when you make money. So it's a very user-friendly structure. And again, this is in keeping with our vision of building a community, having the community in charge, aligning incentives, removing conflicts of interest as much as possible, and so on and so forth.
Okay. This $1 will get paid to you.
You will have to buy credits. Okay, and it is one credit winning cycle. One credit equals $1, and you buy the credits as an in-app purchase through Google or Apple, whichever device you are using. So you buy it through your credit card.
Okay, okay. And if your credits are over, then it will stop. The autopilot will turn off, basically.
If you cancel, then autopilot will turn off. So there's nothing to pay unless you make money.
As in, say I buy 100 credits and I turn on autopilot. Maybe in 3 weeks, those 100 credits get used, then autopilot will turn on.
Yes, but you'll get a notification, say your credits are running out, you should put money. So we will alert you. If you don't want to put more credit, yes, once you run out of credits, autopilot will stop. Think of it like a self-driving car which has a meter. You put money in the meter. Put money in meter, it'll keep going around. The moment money runs out, it will stop. Then you put more money, it'll start again.
Why don't you charge a percentage of profits made, which is the norm, right? In most wealth management, or at least HNI wealth management services, they take a percentage of profits.
I know, yeah. But the point, see, philosophically, I have never agreed with that concept. Because as a service provider, I'm not doing more work just because you're putting $100,000. I do the same work for $100,000 I do for $1,000. So I see it as a fundamentally unfair system. Okay, which penalizes big investors and makes small investors uneconomic. So the result of this whole notion is that small investors can never get in because they are never profitable for the bank. Only want if you don't have 50 lakhs, they will not talk to you. Kotak to baat hi nahi karega. And they're all more like 5 crore. Okay, and then the more money you, I think they're basically wrong. Yeah. What about small people? How will they get in? So we said we will break this link. Never mind at the industry. So we are thinking very differently in a slightly disruptive manner. And we are putting our money where our mouth is. And we are saying that, fine, it is all very well to talk about democratic access and no conflict of interest and aligning interest. But if we keep charging percentage of assets, then we're not aligning anything. Because then naturally what will happen? Yeah? Why would I bother with somebody with $1,000? Kuch paisa nahi banega. Then I'll say, you go away. We have actually gone to the other extreme. We have said if you're investing less than $500, we will actually not charge you even for winning cycles because you're too small. Please come and use our service for free. Get comfortable with it, and then you can add more money as you go along.
Okay, like a premium model.
So at the lower end, we don't even charge that $1. So look, we are not socialists or communists or something like that, but we are ideologically leaning more and more towards the community and no conflict ideology that is espoused by Web3 and decentralized finance.
Got it. Okay. What is the community angle in this?
The community angle at the moment is not very visible because we are just started. But what we want to do is to build what are we doing? Let's take a step back, Akshay. What is it that we're doing? We are creating a group of people who are either equity investors or crypto investors or both. Okay. This is the profile I'm very interested in. Okay. Today, the community is just for us to get feedback, for us to learn about what they want, to get some research and things. But over time, we want to empower the community more and more. Over time, who knows where this will go? We could be issuing tokens for this community. We could say if you have been a loyal user for 1 year, we will give you all kinds of benefits and discounts that other people will not get. And then we could launch new products that will only go to certain portion of that group of people, community, etc. So it will build over time. We wanted to get the product out, get enough people using it, and then we will see how to build the community. Eventually, the community is what will power our decentralized finance strategy. That's why this community is so important to us. And we are right now a small group of people on Telegram and so on and so forth. But over time, it will become more and more potent as we empower it more and more. So for instance, I could say, okay, I'm not going to do this, but if I wanted to say that I want to change the cost of a credit from $1 to $1.50. I could ask my community. One is I could just do it. The other is I could ask the community. And if people say, yeah, we don't mind, or some people say, no, we're never going to use it, etc., that feedback becomes an important guide for us to dictate our future actions. I could go to one extreme level that I could embody this condition into the smart contract and say, if I get 33% of the people agreeing to a price change, the price will change. Then I'm no longer in charge. Somebody proposes and the community says yes or no. It is not in my hands. You see where directionally you can incrementally improve this quite significantly. And that is where the whole investment world will begin to change, when the power shifts from the fund manager to the investor. See, today, for instance, you are a star fund manager in Axis Bank. Okay, you get paid a big bonus because not because you made money, but because markets went down 30%, you went down 10%. You're a hero. Okay, you outperform the market by 3x. Okay, and you go to your boss gives you a handsome bonus. Now, in reality, you get a big bonus, but your investors have lost money. That should not happen. You should not make money when investors are losing money. And that is what decentralized finance tries to change. Now, I think we're many years away from that kind of vision. But in small steps, it will get there.
Okay. I want to kind of understand from you how your recommendation engine works. So you can just give me a little bit of details on that.
Yeah. So what we do is we get a constant stream of data. We have trained our algorithms to take in that data and analyze it very quickly.
The data is about crypto prices across different exchanges.
Crypto prices, volumes, highs, lows, frequency, trading volume, number of purchases, number of sales, shorts, derivatives, options, futures, all that kind of stuff. So then we have trained our algorithms that positive signal, this is what it looks like. So when these numbers look like this, chances of making money are high. That is the pattern that the algorithms have recognized. Now, normally, this is where we have done something really interesting. We use a technology called computer vision, where we take the data and for every element of data, we convert it into a picture. And the picture is not a human image or something, not something that you can understand. It is a 30 by 30 matrix of 900 squares. Each square has a different color, and the color denotes certain attribute. Okay, and in a certain color pattern then represents a profitable signal. Okay, so when we get the data, we convert all of them to images, and then we know which kind of images represent potential profit, and then we do image matching. It is a very fast process. And then once we find the matches, that then gives us the short list of insights and signals that are likely to be profitable.
Okay. And how many currencies do you cover?
We cover about 30 currencies.
Okay.
Only. And remember, there are over 10,000 currencies in the world.
Yes. That's right. Yeah. Okay. But 30 would cover all the mainstream ones like Bitcoin, Ethereum.
The most liquid, the most traded ones with the highest volume and the highest market cap. Yeah.
So when you want to move from crypto plus equity plus debt, how will that happen?
So today the digital assets world is separate, the traditional assets world is separate. The two have not intersected, but will intersect. For instance, the crypto world is 24 hours a day, 7 days a week. The traditional world is T+2 settlement, opens at 9:15, closes at 4 o'clock, doesn't work on Saturdays, Sundays. That's the first disconnect. How do you make that even? Now, there is an experiment, I'm told, going on in Australia where they want to convert the exchange to 24 hours, 7 days a week operation. Now, I don't know how it will work. Maybe it won't succeed, but at least people are now beginning to think about how it might work.
Okay. Tell me about how you will scale this? Now, this is your flagship product, right? This is the product you want to bet the company on. How will you
This is
scale
a
it?
big product. So again, through partnerships, and there are two models for scale up. One is through partnerships, and the second model is we have created a second version of Investor AI Crypto for the high net worth individuals, because the high net worth individuals, many of them have decided that we wish to allocate 3% of our portfolio to crypto assets. Okay. Now, let us say you said that. And so let us say you want to allocate 50 lakhs to crypto. Okay. Now, how do you do it? You don't know. There is no advice. No bank will tell you what to buy because they don't do it. You can do some own research and decide I'll buy a little bit of Bitcoin, a little bit of Ether, a little bit of Matic, a little bit of this, a little bit of that. But that's, okay, you did analysis once. The market is changing so fast, you do continuous analysis. Unless you have a team of analysts sitting in your office, you cannot do that. So it is impossible for a high net worth individual who wants crypto as a long-term investment. How do you do this? So we have created a version that we call Platinum Club for the high net worth people, where the entry criteria is the minimum investment is higher, but you get the full service, and it's a very sophisticated service and allows you to invest in crypto and other things.
What is the difference? Like, is it like more personalized? Is it a human interface?
No, it's still automated. There is one difference is that in the app, you will not be allowed to invest more than $10,000. Okay, in the retail app, because that we feel that is a more conservative approach to take. In our Platinum Club, we start at 100,000. So you have to put a minimum there. And then in the app, we only have a long algo. We don't have shorts. In Platinum Club, we have a short algo also. So you get a choice of different algorithms. So it's a much more sophisticated product. It's aimed at the professional investor, high net worth people who can't afford to take that kind of risk.
And okay, so let's talk about each of these elements on how you plan to build it. So how will partnerships work? Like you would go to a WazirX and tell them to offer this to their user base as a paid service?
Exactly. Okay. As a paid service. And again, we work out some commercial model between us. So I think credits can still be bought by us, but through us or through WazirX. It doesn't matter.
Got it. And for the HNI app, the Platinum Club, how will you scale that up? Like?
No, that we don't want to go massive scale. We want to just build a good customer base. And most of it is through our network, our existing shareholders, advisors, etc. And once we have a core body of customers, we want to see how this whole thing works. And then we can scale it up. And that scaling, that again will happen through partners. We can go to boutique wealth management firms. Look, if here is a product, if you want to offer to your customers for crypto investment. They don't have anything. So, this is better than anything else in the market at the moment.
And so, are you planning to do a fundraise now? You've been bootstrapped so far, right?
Yeah. We were planning to do a fundraise. Then the market went crazy. So we have dialed it back. We are doing a smaller fundraise. And basically, we want to scale our Platinum Club product. We want to scale our crypto product. We want to scale some of the partnerships we've got. And just want to raise enough money for that. And then we will do a bigger fundraise once the market settles down.
So what is the eventual long-term vision of a mutual fund on blockchain, if I can give that as a summary line for so that?
Yeah, the long-term vision, Akshay, would be multi-asset class platform that is very low cost, very frictionless, and uses Web3 technology.
So that you would build that as a DAO, or
that is one option. That is one option, but that's not the only option. Yeah, it could be a DAO. See, the problem with DAO is that the regulatory stance is very unclear. And what I don't want to do is to end up creating a premature DAO in a jurisdiction that currently looks okay, but 2 years from now will suddenly look inefficient for us. Also, today, we don't manage money. We are giving you the technology tools to manage your own money. Money always stays in your account. It never comes to us. DAO changes that. So it's a big step for us. So we want to test our current thesis. We want to see how it goes. If helping people manage their own money in a frictionless way, if that gives us the results we want, then DAO may not be the best option for us, or it may be the best option. So that's what I'm saying. It's very early to say.
This was the Spotlight, presented by The Podium. To listen to more such interesting conversations, log on to thepodium.in.